The Nightly Business Report.
Good evening. Tonight, Kristalina Georgieva, the managing director of the IMF, cautions that the world economy is at risk from US tariffs. She called for the resolution of trade tensions between the United States and its trading partners. Concerned about the US reciprocal tariff policy, Sri Lanka's garment industry has warned that the new tariffs could disrupt the nation's major export industry and put thousands of jobs at risk. The ASPI fell sharply by more than 1% and the Colombo Stock Exchange concluded the day down. The S&P SL20 experienced a precipitous decline as well, closing more than 2% down. And as President Trump's tariffs stoked worries of a full-scale trade war and a worldwide economic downturn, Wall Street benchmarks fell yesterday.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. IMF Managing Director Kristalina Georgieva warned that US tariffs pose risks to the global economy. She urged the US and its trading partners to resolve trade tensions. The IMF's full assessment will be released in the World Economic Outlook at the upcoming spring meetings.
IMF Managing Director Kristalina Georgieva issued a statement regarding the recent announcement of the US tariffs, highlighting the significant risk they pose to the global economy. She stated that the IMF is still assessing the microeconomic implications of the new tariff measures, which comes to a time of sluggish global growth. Georgieva emphasized the importance of the avoiding actions that could further damage the world economy. She urged that the United States and its trading partners to work together consecutively to resolve trade tensions and reduce uncertainty. The IMF Managing Director stressed the need for global cooperation to mitigate the negative effects of trade disputes. Georgieva also confirmed that the IMF's assessment will be included in the upcoming World Economic Outlook. The report will be published during the IMF World Bank spring meetings later this month.
Sri Lanka has signed a contract with Japanese company Yachiyo Engineering for the detailed design of the digital terrestrial television broadcasting project. The project, funded by a yen loan, aims to support Sri Lanka's digital economy by efficiently utilizing limited frequencies. According to the Japanese embassy, the initiative will enhance public access to diverse content, including critical information on natural disasters, while promoting a competitive broadcasting environment. Japanese Ambassador Aiko Isomata emphasized the need for timely implementation, noting that it took 10 years to finalize the consultant contract after the bilateral agreement between Japan and Sri Lanka. The project is seen as a step towards improving the quality of life for Sri Lankans through better access to digital services. Both countries are committed to driving the transformation to a digital economy. Sri Lanka's apparel industry has expressed concern over the US reciprocal tariff policy, warning that the new tariffs could disrupt the country's largest export sector and jeopardize thousands of jobs.
Sri Lanka's apparel industry has raised concerns over the US reciprocal tariff policies, which will impose a 10% baseline tariff starting April 5th, increasing to 44% on Sri Lankan exports from April 9th. Johan Lawrence and Secretary General of the Joint Apparel Association Forum warned that these high tariffs could push US business to competitors and, of course, competitors with lower tariffs as well. The United States is Sri Lanka's largest apparel market, accounting for over 40% of the sector's total exports. Lawrence emphasized that the swift implementation The United States is Sri Lanka's largest apparel market, accounting for over 40% of sector's total export. Lawrence emphasized that the swift implementation of these tariffs could lead to a significant loss of business to other markets as well, which cannot be easily replaced. The Sri Lankan government has already begun consultations with the industry to find a solution. Lawrence expressed appreciation for the government's prompt action and cooperation in addressing these issues within the framework of Sri Lanka's IMF program. Despite the challenges, the apparel sector remains committed to transparency, ethical production and sustainable value creation.
The Export Development Board and Sri Lanka Police have signed a memorandum of understanding to enhance cooperation in investigating anti-money laundering and countering the financing of terrorism. The MOU was signed at the Sri Lanka Police headquarters in Colombo by EDB CEO Mangala Vijayasinghe and Acting Inspector General of Police Priyantha Veerasurya. This agreement aims to strengthen national efforts to prevent money laundering and improve enforcement of foreign exchange regulations. The partnership will focus on collaboration between the EDB and Sri Lanka Police police to combat financial crimes. The EDB emphasized that this MOU will contribute to enhancing legal enforcement mechanisms in Sri Lanka. The initiative is expected to have a positive impact on Sri Lanka's financial system and international trade. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange ended lower today with the ASPI declining significantly, down by over 1%. The S&P SL20 saw a sharp drop, closing lower by more than 2%. The market experienced a strong trading volume, with total shares traded reaching several million. Turnover for the day exceeded billions, reflecting active participation despite the downturn. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. Today, the Colombo Stock Exchange saw a continuation of the adverse sentiment from yesterday following the tariff announcement by the United States. The all-share price index once again dropped dramatically as selling pressure took over the market as well. The all-share price index dropped by another 284 points today and ended the day in the red at 15,373. Similar to yesterday, today also saw a drastic drop in the ASPI as soon as the market opened. While there was a mild recovery towards midday, the index stayed subdued amid visible volatility. The banking sector was a major contributor to this downturn of the index, with Sampath Bank, Commercial Bank and HNB Bank being among the top negative contributors alongside John Keells Holdings and LOLC Holdings. Today's turnover stood at 2.3 billion rupees, slightly lower than yesterday's level but higher than the monthly average of 2.2 billion rupees as well. The banking sector dominated contribution to turnover with a share of 31%. This was followed by the capital goods sector and the diversified financial sector, which made a joint contribution of about 34%. Thank you.
The market started the week on a positive note, with the ASPI showing gains and the S&P SL20 continuing its upward momentum in the first 2 days. However, a subsequent decline led to the market closing on a negative note by the week's end. For further insights, we speak with Akna Tennakun from First Capital Holdings.
Thank you, Anuradhi. During the early days of the week, which also marked the start of April, we saw a mild uptick in the market. The Colombo Stock Exchange saw investor sentiment remain positive during these early days, with the ASPI staying on the green and turnover remaining moderate. In fact, on the 2nd of April, we saw the ASPI surpassing the 16,000 mark, ending the day at 16,007. However, things took an adverse turn when the US President Donald Trump announced the reciprocal tariff regime, and the news reached the market on the 3rd of April. So following this announcement, the market dwindled dramatically, with panic selling, particularly by retail investors, gripping the market. Export-oriented counters were particularly affected, and the banking sector also saw increased selling pressure. So the week concluded with the ASPI shedding 350 points and 284 points consecutively on the last 2 days of the week. Turnover stayed high during this period, crossing the 3 billion rupee mark and surpassing the monthly average of 2.2 billion rupees on both days. So all in all, the week started off with the ASPI climbing to 15,934 and the turnover hovering around the 1.9 billion mark. By the end of the week, the ASPI dropped to 15,373, with turnover rising to 3.2 billion rupees, propelled by dramatic selling that has been taking place. Thank you.
Gold prices edged lower in Asian trading today, though they remained on track for a fifth consecutive weekly gain. Spot gold dropped 0.4% to $3,101.35 per ounce after hitting a record high of $3,168.04 yesterday. Despite the dip, gold has continued to benefit from uncertainty surrounding U.S. President Donald Trump's recently announced trade tariffs. Gold futures for June delivery rose 0.2% to $3,128.41 per ounce. Traders are closely monitoring the impact of the new tariffs on global markets, which has contributed to gold's safe haven appeal. Overall, gold remains poised for a strong finish to the week amid ongoing trade tensions. Oil prices were set for their lowest close since the 2021 pandemic, pressured by U.S. President Donald Trump's new tariffs and an OPEC Plus output increase. Brent futures fell by 3.3% to $67.85 per barrel, while U.S. West Texas Intermediate crude dropped by 3.5% to $64.63. Both benchmarks were headed for their largest weekly percentage losses in 6 months. The tariff announcement from Trump had a significant impact on crude prices, while global investors sought safer assets like bonds, the Japanese yen and gold. The dollar index fell to 102.98, its lowest level since mid-October. The Sri Lankan rupee showed little change against the US dollar at commercial banks today, maintaining stability compared to yesterday. According to Commercial Bank, the buying rate for the US dollar remains unchanged, while the selling rate has also held steady. Let's now take a closer look at how the rupee is performing against other major global currencies in today's market. A short break now. This is the Nightly Business Report. Welcome back. Sala Enterprises, a pioneer in information and communication technology innovation in Sri Lanka for over 3 decades, introduced Sri Lanka's first artificial intelligence computing device, the Embark AI Mouse, at the Infotel exhibition. Sala Enterprises, a pioneer in Sri Lanka's ICT sector, launched the Embark AI Mouse, the country's first artificial intelligence computing device, at the Infotel exhibition. The Embark AI Mouse is designed to enhance productivity, creativity and security, featuring voice typing, multilingual translation and image design, as well as OCR capabilities. Sala Enterprises Chairman and Managing Director Chintaka Vijayavikrama highlighted the device's commitment to local data storage and AI-powered customization. This launch marks a significant step in advancing Sri Lanka's IT landscape, continuing the company's legacy of technological innovation. Vijayavikrama also noted the importance of the Embark AI Mouse in bridging language barriers, offering translation services in over 60 languages. The device is set to revolutionize how users interact with computers, improving accuracy and efficiency. Sala Enterprises remains committed to empowering Sri Lankans with cutting-edge technology, reinforcing its role as a leader in the nation's digital transformation. Sandbox Consultancy Services Limited has appointed Derana Gunasekara as its new Chief Financial Officer. With over 20 years of cross-industry experience, Derana has a strong background in financial strategy, governance and business transformation. He previously served as CFO at the Hiridharamani Group and has held senior finance leadership positions across sectors like FMCG, logistics, hospitality and consulting. Derana is a chartered global management accountant and a fellow member of the Chartered Institute of Management Accountants. With an MBA from the Postgraduate Institute of Management, in his new role, he will also contribute as a senior faculty member at Sandbox, sharing his expertise in financial leadership. Gunasekara's appointment strengthens Sandbox's ability to enhance financial strategy and governance for its clients. AIA Insurance marks 30 years of its merit-based higher education scholarships in Sri Lanka, supporting top students since 1994. The program continues to empower young minds, fostering academic excellence across the nation. AIA Insurance celebrates 30 years of its higher education scholarships program in Sri Lanka, one of the country's longest-standing CSR initiatives. Launched to nurture Sri Lanka's brightest students, the program has supported over 750 scholars, many of whom have excelled in fields like medicine, law, engineering and public service. This initiative aligns with AIA's commitment to helping people live healthier, longer, better lives, making a lasting impact on Sri Lanka's future leaders. Despite Sri Lanka's high literacy rate, tertiary education enrollment remains low, highlighting a significant gap in access to higher education. The 2022 economic crisis further exacerbated these challenges, affecting families' ability to invest in education. AIA continues to bridge this gap, empowering students to improve their circumstances and fulfill their dreams. Through this program, AIA plays a vital role in strengthening the nation's human capital. With the program, AIA is building a brighter future for Sri Lanka through the power of education. Derana Gaziata plc, in collaboration with Huawei and Samsung, has achieved a major milestone in Sri Lanka's 5G journey by demonstrating 6.2 gigabytes per second speeds on its 5G standalone ready network. This is the fastest speed ever recorded in Sri Lanka on a commercial smartphone, the Samsung Galaxy S25 Ultra. The demonstration highlights the power of 5.5G Ultra advanced technology, setting a new benchmark for mobile connectivity in the country. The trial was made possible by innovations such as massive MIMO 3cc carrier aggregation and 1024 QAM modulation. As the first and only network in Sri Lanka with a 5G SA ready network, Dialog's achievement underscores its commitment to advancing mobile connectivity. Huawei and Samsung played crucial roles, with Huawei providing network solutions and Samsung offering the necessary features for the successful demonstration. Cinnamon Hotels and Resorts has appointed Avireps India to enhance its public relations and brand positioning in the Indian market. With India's growing outbound travel segment, the partnership aims to strengthen Cinnamon's presence and leadership among Indian travelers.
Cinnamon Hotels and Resorts has appointed Avireps India to lead its public relations and brand positions efforts in India. The partnership aims to strengthen Cinnamon's presence in India, capitalizing on the growing outbound travel market. With a portfolio of 17 properties, including Sri Lanka's first integrated resort, Ceylon, Cinnamon Life, the brand is setting new benchmarks to luxury hospitality. Cinnamon Life, Sri Lanka's largest private investment at 1.3 billion USDs, features a 687 rooms, 12 F&B spaces and South Asia's largest gaming space. Redhay Tower, CCO of Cinnamon Hotels, and highlighting the strong revival of Sri Lanka's tourism sector, aiming for 2.5 million tourists by 2025. Elena Pereira, General Manager of Avera India, has emphasized the potential of boosting Cinnamon's visibility among luxury Indian travelers. The group also plans to expand its presence internationally with new properties in Kandy and upcoming ventures in Maldives, UK, Middle East and China. Cinnamon Hotels and Resorts continue to redefine luxury and immersive hospitality across the region, setting new standards for industries.
Primelands Residencies plc has appointed Senior Professor Sampath Amaratunga as an independent non-executive director to its board. Professor Amaratunga, a distinguished academic and expert in economics, governance and corporate strategy, brings valuable experience to the company's leadership. He currently serves as Chairman and Senior Professor of Business Economics at the University of Sri Jayawardhanapura and has held key positions such as Chairman of the University Grants Commission and Vice Chancellor of the University of Sri Jayawardhanapura. Professor Amaratunga holds multiple advanced degrees and has contributed to over 75 referred publications. In recognition of his efforts in strengthening Sri Lanka-Japan relations, he was awarded the prestigious Order of the Rising Sun by the Government of Japan in 2024. His experience in corporate governance includes serving as an independent director on various boards, both listed and non-listed. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets saw steep losses today as concerns over global recession deepened following US President Donald Trump's announcement of significant trade tariffs. Japan's Nikkei 225 led the regional decline, dropping more than 2.4%, while South Korea's Kospi and Australia's S&P ASX 200 also experienced sharp retreats. The Nikkei fell nearly 3% today, marking its lowest point since August of 2024. Japan's losses were compounded by a stronger yen, which negatively impacts exporters. Other markets in the region, such as Singapore's Straits Times Index, also posted heavy losses, shedding 2.8%, with major markets in China, Hong Kong, Taiwan and Indonesia closed for public holidays. Overall trading volumes were thin across Asia. Wall Street benchmarks slumped yesterday, ending with the largest one-day percentage losses in years as US President Donald Trump's sweeping tariffs ignited fears of an all-out trade war and a global economic recession.
Wall Street's main indexes suffered their biggest one-day percentage losses since 2020 on Thursday, the day after President Donald Trump's Liberation Day. The Dow dropped 4%, the S&P 500 shed more than 4.8%, and the Nasdaq was down 6%. Trump's Wednesday announcement of sweeping 10% tariffs on most imports and much higher duties on dozens of other countries has ignited fears of an all-out trade war and a global economic recession. China vowed tariff retaliation, as did the European Union, which faces a 20% duty. South Korea, Mexico, India, and several other trading partners said they would hold off for now as they seek concessions before the targeted tariffs take effect on April 9th. Trump's tariffs sparked a global stock sell-off, with tech hit the hardest. Apple sank more than 9%, reeling from an aggregate 54% tariff on China, the base for much of the iPhone maker's manufacturing. Amazon also slumped 9%, and Nvidia spiraled nearly 8%. Retailers were hit hard, with Nike and Ralph Lauren tumbling more than 14% and 16% respectively on a raft of new tariffs on major production hubs including Vietnam, Indonesia, and China. And bank stocks tumbled to multi-month lows, with Citigroup leading the pack, down over 12%. The consumer staples sector was one of the few bright spots as investors sought out the traditionally defensive area. It was also buoyed on Thursday by Lamb Weston, which gained 10% after reporting earnings. Trump says the tariffs will raise revenue and create jobs in the U.S. But economists widely predict they will raise prices and cast a chill over global growth.
US President Trump has announced that his administration will impose a 25% tariff on over $460 billion worth of vehicle and auto part imports each year. The move is expected to significantly impact the global automotive industry, with potential repercussions for both manufacturers and consumers.
Donald Trump's 25% tariff on US auto imports kicks in Thursday, and the levies look set to upend the industry. A Reuters calculation shows the duties will hit some $460 billion worth of cars and parts every year. The US president says that will create jobs and boost the economy as automakers shift production to America.
These tariffs are going to give us growth like you haven't seen before, and it'll be something very special to watch.
With the tariffs on vehicles in effect, the levies on parts will then start next month. Economists have warned it's all likely to mean higher prices and reduced choice for consumers, and there are already signs that could be true. The Wall Street Journal says Volkswagen will introduce an import fee for vehicles affected by the duties. It says the German giant has halted shipments from Mexico for now and will inform dealers by mid-April how prices will change for imported cars. Meanwhile, Stellantis, the owner of brands including Jeep, will shut one major plant in Canada for 2 weeks. That's according to a union official there, who said the move was driven by the new tariffs. Such signs of turmoil are unlikely to worry Trump, however, who has said he couldn't care less if foreign cars get more expensive. He says Americans can just buy locally made autos instead. Ford has said it will offer big discounts from Thursday in a bid to make that happen. But many big-selling vehicles from US brands are actually made overseas or are full of imported parts. For now, prices may not rise immediately as dealers have pre-tariff cars in stock, but a surge in sales over the first quarter of the year suggests consumers are rushing to snap up those vehicles. Once they're gone, price rises may not be far behind.
That's all from us on the Nightly Business Report for today. We'll see you again Monday with the latest updates in the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.